So here, just obviously this is a little example. So the price moves sideways, topping out and bottoming at a similar price on each price swing. Eventually the price breaks below the rectangle and the price falls sharply. Okay, so obviously I've shown you that and you understand the pattern of this. Okay.
Yeah, you know, regarding for the
previous, the other one, yeah.
I think when for next time, not for me, in general,
yes.
When you example, it's going.
It's much better to put the proper example up there. Yes.
You get not time to only for me. For example, when I see the example for chart.
Clear. No, thank you for the tip. I will do that. I will put a proper one there. I'm going to make a
you know, because it's necessary to be or to see for each, like for the minimum one example.
Definitely. No, you're right. I know that, as you say, looking at this, I think this just explaining what the pattern is here, but you're right, looking at an actual chart, then you see properly how it would look in real life than this one. So thank you for the advice. I will change it. I will put
because this information is very valuable.
Yes, yes, I will update it and put a real one in before I send it to you too. I will update it. Okay, so thank you. You're helping me build this now. Okay.
No, but you know, the information is very important.
No, it is very important, and I understand exactly what you're saying. Looking at it in the real, how it would be if you are trading and you're looking at your screen, you need to see how it would look here. So I will definitely put something in here.
Because when I see screen and you read and I imagine everything going.
Yes, I know. I know. So it's better to have it visually on the screen. You're right. So I will definitely I will put a proper slide in here then, and I will change it. Okay, so we're almost done here. So during the rectangle, the price action converged into a narrower range. This process formed another chart pattern called the triangle. The price broke below the triangle before dropping below the low of the rectangle. So here, rectangle versus head and shoulders pattern. A rectangle is a period where the price is moving sideways. A head and shoulders pattern is where the price is transitioning from an upward, to a downward trend. The price is making higher peaks on the left side and then a lower peak on the right. It shows the uptrend may be reversing. Limitations of the rectangle chart pattern. A rectangle is easy to spot, but not so easy to trade. The price won't always reach the prior support or resistance levels, and sometimes it will exceed them. That can trick traders, resulting in missed or losing trades. False breakouts are plentiful during rectangles. Some traders actually prefer to wait for a false breakout and then place a trade betting that the range will continue. Some breakouts will result in huge profits as the price explodes out of the triangle with a big move. Many triangles will end with a minimal price movement. In some cases, the price moves out of the range and then starts ranging again. Okay. So that is it with our triangles and our continuation patterns. Okay, so we have, obviously we learned, we have our triangle. Let me just go here just to recap. So we've got our triangles, and we learned that about our ascending, descending, and symmetrical triangles. We learned about the flags and how it works. And then again, we've got the bullish flag, which is like this, and then we've got our bearish flag over here. Okay, those were our two flags, and then we have the pennant, which looks like this, also with the flagpole and the breakouts, okay? And then we have obviously our, and then here you have your real deal here that you can see. And then obviously the rectangle, and I will change this image before I send it to you and put a proper one in there.
You know, because this like maths.
Yes.
Yeah. If you don't see.
Of course, Kamal. Yeah, if you don't
I'm
see
sorry,
it properly. No, if you don't see it, I completely agree with you. So yeah, I will just update it before I send it to you so that you've also got it there and you can reference back to it there. Okay. So let us move on from here. So what do you want to move to? We can go to the candlestick or we can go to the Elliott wave theory. I don't know what you...
Regarding for candlestick, I think if you have the file PDF,
I will send it to you. Yeah,
yeah,
I will
because
send it to you.
it's a long time.
Yeah.
And it's not enough even 2 months to
No,
understand.
I know. Okay, so I'll send that to you.
Yeah, we go to Elliott because
good. Okay, we'll go to that.
If you like to take a look about it, no problem for the
No, I mean, I just wanted to show you. So it's really good, and I think it explains everything here. Sure. Okay, to you. So you will have this, and
you know, because maybe we stay three times to finish this candlestick.
Yeah, no, definitely. So I'll send it to you, maybe go over it, and if there's anything that you want us to focus on in here, then maybe let me know once you get to it. But it's everything. It explains the patterns, so obviously all the different types of patterns of the candlesticks, which is great. I'll just show you quickly. So on page 14, so it explains everything here, you know. It's really good.
Yeah, sure.
Okay, so everything in detail, and I think it's quite simply written. So the doji candlestick pattern, you know, how this looks here, and about the prices, you know, that it's explaining, and then how it would look on the actual chart. So for me, I just think it's a very good reference, the dragonfly.
Yeah.
So so I'll send it through to you, and then you've got it, and then you can reference it and go through it. And like I say, if maybe there's any questions you have, or you want to discuss anything about particular things, and then I'll send this to you, and then I also will look for, because I think this is the best one. And then I can also send you that other chart. You said that you would like something that you can just stick. But I think this is good to go through and learn, so that because it goes through everything.
You sent all the file for me, yeah? Yes or no?
I've sent you the other one. I will send afterwards, the one that I've been keeping. So the one, every time we do lessons, I add on to that one.
Regarding for the candlesticks.
No, I will send this to you now. I haven't sent you anything with the candlesticks. I only sent you the one PDF that we did. This one.
Only this page, or all this.
I will send you the whole booklet. Okay. Yeah, okay. It's one PDF for you.
Yeah, it's enough for the candlesticks, because I told you, if you follow the candlesticks, and I'm not specialized for candlesticks, you know, some people, they're working only by candlesticks.
Yes.
But on this, for me, it's enough, because to see to read the market, you know.
Definitely.
Yeah, but I don't like to be specialized for the candlesticks.
No, okay, but just to have the understanding. But like I said, I'll send this to you. It's a whole book. So it's 168 pages. And yeah, I just thought, you know, you can keep it, you can read it in your own time then, and if you're happy to, but it explains a lot here. So there is your candlestick trading Bible. That
you know, it's very good. And when you have the idea about the candle, maybe you can play. For example, you see 3 candles, you can take the first for 2 or 3 minutes. You can get, for
Yes.
example, 2 or 3 until $500. You know.
Wow. Yes.
Yeah, but
yes.
when the candle, if say you take buy, when the candle is coming big and you see it's enough, it's
Yes. You stop then. Yeah.
Mm.
So yes. So after, I will send this through to you today because I have quite a busy morning with classes. But then I will send you the patterns, and I just want to update this with the proper graph or chart. Sorry, and then I will send you this. And then what I'll do is, as we finish things, I will send them to you so you have them. So just that other technical, the one that I'm just keeping, so I'll just put little notes on there, and then I'll send that to you when we're done as well. Okay. So yeah, I'm just going to read through it. Obviously, the Elliott wave theory, modern theory for the 21st century market. So what is the Elliott wave theory? And I know in the PDF I sent you, we just touched on it there was one page really that was explaining it. So the Elliott wave theory is named after Ralph Nelson Elliott, and he was born on the 28th of July, 1871, and died on the 15th of January, 1948.
Can I tell you something about
Yes.
Elliott? Elliott, he put 12 0 for the price action.
Wow.
12-1. And the final, he's dead from the price action.
Oh my goodness. That was the last time for him.